Saturday, February 14th, 1:26 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money, and a happy Valentine's Day. Going to discuss the sectors in the S&P 500. There's 11 sectors in the S&P 500. Each sector has a stock ETF that's tradable, as well as they have options on them. Stock ETF is an exchange-traded fund similar to a mutual fund. These stock ETFs in the sectors are exclusive just companies, where mutual funds may have ones that are currencies, commodities, yields, equity, aka stocks. But again, these stock sectors, ETFs, are just company stocks. Companies manage these, and they get them listed on the stock exchange. So you don't have to buy the individual companies in the sectors. You could buy the ETF that's managed by a company. That being said, look at the time frame. Each chart will be a week for several years. Also want to mention this to you, if you're not situation aware. These are the 11 sectors. This is the column, year to date. Technology is negative, year to date. Financial services, negative, year to date. Consumer cycle, negative. And communications, negative. I made a video a few days ago for my Patreon members showing them the major stock indexes. Most of it was about the S&P 500, showing them and telling them I'm bearish bias. I'm looking to trade bearish. Shorts make money on the downside. Yep. Again, those indexes are heavily weighted in technology, such as the NASDAQ, heavily weighted in technology, and the Magnificent Seven stocks. Bigger they are, the harder they fall. So again, they are underperforming. They are losers this year. If you bought them at the end of the year, expect them to be the superstars this year, and now you're all disappointed, well, own up, be adult, accept your negative year-to-date return before we go on to another quarter of the year and close them out. Own up. Or stay in the losing trade. Some of us are adapting. Takes time. There's a learning curve. But your situation, aware of it, own up. Again, same with financials. They are trading down for the year. So I will go over these 11 sectors. You'll see the charts, as well as you see right here. And look, the solid sectors, the best of the best, are double-digit return. So not only technology, financial, negative, take this into account, the positive, triple, double. Yeah, that's quite a bit of a loss if you're in those. And if you're doing dollar cost average, losing further on the downside, that's all on you. Own up. I share often the stock indexes and the stock sectors, showing you where leadership is if you want to invest on the bullish bias side, as well as opportunities to invest on the bearish side. Like I mentioned, on my Patreon page the past days, I shared my bearish bias on the S&P 500. If you have an account set up to trade the futures, you could participate in that too before the regular stock market opens. The wonderful thing is that next day, the stock market sold off heavy. Good job out of you. If you're in a bearish trade, took profits, good job out of you. If you didn't take a bearish trade, but if you took profits in your bullish positions, good job out of you. You don't necessarily have to be in the bearish trade to be doing well. You can take profits in your winning positions on the upside, so you won't see that taking away what you worked hard for. Yeah. Again, you can see here in the red, there's industries within each sector. We'll go over this back here momentarily. Let's go to the charts now. So again, 11 sectors in the S&P 500. This is the S&P 500. 5-year chart, each candle's a week. This year, made a new high for the year. Got it? New high, 2026 new high. We've been making new highs for the past several years under the prior administration, record highs. And this administration, we had some big sell-offs, bigger than the prior, and we're an extension here. Extension A to B. S&P 500, big consolidation here. Rotation of sectors. Here, the end of last year and since this year, big consolidation, but the height, the trading range high and low, it's much smaller. More signs of distribution. Rotation out of sectors. So there's money still flowing in the stock market, but they're floating out of their distribution for weeks, months, out of technology. Again, majority of people are still buying on the dip technology, and they're losing more on the downside, just like Bitcoin. So here we are on the sector called technology, stock ETF XLK, 5-year chart, very similar to the S&P 500. Except the S&P 500, I mentioned, all-time new high this year. S&P 500 again, stock index 500, U.S. publicly traded companies, S&P 500 comprised of several stock indexes. Sector technology, we are below the highs of last year. Loser, it's not leadership. And it could get worse. Now, what it did is close inside candle for the past week. A bearish inside candle. Healthcare. Look at that. Big consolidation up here. It also made new highs this year. Big consolidation. Big difference than it was years before. Again, the prior years trending down. Good economy, bad economy. People are still going to have a need for healthcare. And that affects their wealth because a lot of people go in debt. Financials. Yep. Again, this was the high this year. Huge sell-off. And this week, we made a new low for the year. Huge sell-off. Bearish candle. Very bearish. But I'll show you here. Look, it's a huge consolidation. We also had buyers down here last year at those dips. But this is the first big, extremely bearish red candle that formed in here. That being said, one would expect possible retracement somewhere in midpoint, and that's going to give us a clue when that next weekly candle gets done if things are going to be becoming worse. So look at this big red candle here last year. We had a retracement up here, forming that bearish pin bar, and things got worse. Consumer discretionary. Inside candle for the week. Near the lows. Last week was the lows. So we're near the lows now again. Communication services. Huge consolidation up here. Just barely hanging. Again, looks like we might see further downside. Money comes flowing out, going into this stronger sectors. Time will tell. Industrial, all-time new high, outstanding. Look at that, nice. I have a gap here, has not been tested nor filled. What's concerning to me is, here was the first week of the year, that big green candle, followed by a big, strong green candle, 2 inside candles, another impulse move up. So I'll see how it's going to react if and when it tests down here, prior demand zone. Because you have those inside candles, huge impulse move up. This could be a sweet spot for an opportunity to buy the dip if it gets down there. But my concern is that green candle, big wick on the top, forming like a bearish pin bar. Look, if this thing does a trend reversal, that could be really bad for the stock market. Because again, we saw which sectors are doing really bad: technology, financials. So if this sector sells off and if money doesn't flow into those, that's going to have a real big negative impact in the stock market. So I'm watching this one closely. I am in the stock ETF. I've been doing dollar cost average on it, and I've been performing better than the stock index. I'll share you some insight here. Again, we're looking at the stock ETF XLI. Here's the stock ETF XLI. Here's the top 10 holdings. Nothing impressive. I'm not impressed. Look at those companies. Yeah. Especially Boeing. You see my past video I made about the Dow Jones Industrial Average. Boeing, one of the worst performing companies on the Dow Jones Industrial Average. Yeah. So again, these companies are the ones, the top 10 in this index. Not all of them are performing equal. Let's go back to the charts. XLI. Let's go to the next. Consumer Staples. XLP. Also all-time new high. I am also in this. I've shared this weeks ago. I've been buying these. I've been sharing these for months, which ones I've been buying. So my concern is same thing here. If this has a big reversal, that could be really harmful to the stock market if the other ones don't take off. So again, XLP, huge trading range from the bottom to the high this year. Let's go look at that now. Q in the stock ETF. These are the top 10 holdings. Walmart, Costco, Procter & Gamble. Yeah, you can see Walmart, the stock ETF holds over 11%. Down here, they're including Monster Beverage, representing 3.69. Monster Beverage. And Pepsi. Entertaining how these are leaderships right now, not the Magnificent Seven. All right, let's continue. XLE Energy, all-time new high. Give you some insight. I'm in commodities and bullish commodities of energy, but I'm not using stocks. I told you the word commodities. I am bullish, trading monthly in the bullish natural gas and crude oil positions, using options, using derivatives on the equity. Doing outstanding. Again, United States is exporting. And I think the United States top three, definitely the top three export products is energy. Might be natural gas, crude oil, and also airplane parts. Yep, so it's not the expected items that create a lot of jobs, pay a lot of good raises. Nope. It's very few. Top three, again, not a big diversification. Huge export of energy. Dirty fossil fuel products. Again, XLE. Utilities, XLU. Made a new high for the year. Still below the highs of last year. Big opportunity if it comes down here on weakness for potential reloading. Real estate. Look at this. New high for the year. So that big green body. Massive consolidation here. Yeah, way below the highs of 2021. Zoom in here. So all this consolidation, we broke out. Nice. Still below the, like I said, below the highs of last year, below the highs of the prior year. Real estate, XLRE. There's different industries of real estate, residential, commercial. And you can even break that down more in healthcare facilities, storage units. So again, doesn't mean it's residential real estate. I just gave discussions, deep videos on those, deep insight on my real estate videos. Let's continue. XLB materials, all-time new high. I am also on this. Look at that, all-time new high, outperforming the stock indexes. Again, all these ETFs I've been sharing for months, past weeks I've been showing from year-to-date performance, how you could be outperforming the S&P 500. So let's go look at this stock ETF, the top 10 assets in there. Again, these top 10, one could buy on their own individually, taking on higher risk. Versus if you do the stock ETF or stock index, it's more diversified, lower risk. And those companies that manage these ETFs, periodically, they change companies out. They take out the losers and add the better performers. So look at here. See Sherwin-Williams Paint Company. That's part of the Dow Jones Industrial Average. I shared when that went on the index, was very recent, and also how it's not performing the best. Yep. So this, we're going to finish this off here. These 11 sectors, things could change. Yep. But right now, the momentum's going where I'm showing you on those energy sectors and the defensive kind of companies. Take it what it is. Things could change for the worse in the ones in red. Again, but money is still going in the stock market. Choose the leadership and be flexible. Get out of the losers. Because the policy here is weaker US dollar, attempt to make the US interest rates lower. Well, let me tell you something. As businesses take on more risk, take on more debt, some of them are planning short term. And some of that short term bites them in the bullet because the unforeseen comes around. And if you remember, the late 1990s and early 2000s, there were new industries that came in the stock market. And those are disruptive and they outperform for long term. But the old school ones are still here. So again, some of these high-tech companies may become bought into other companies, mergers and acquisitions. Time will tell. Thank you as always. Spending just a little time with me. That's it for the video. Thank you for watching.